Good afternoon. Thank you for joining us. I'm just watching the number of participants going up. So, for those who are already here, if you feel you would like to say hello to the group, please do put something in chat, perhaps where you're based at the moment and what the weather's like. Hello, wet Sheffield. I'm in vaguely sunny Leicester myself. We've got a very large number of participants today, so I am going to let the numbers clock up a bit. Um, so bear with me for the pause if you don't mind. Okay, I think we'll start going. So, thank you very much indeed for joining us. We've got a really interesting and very relevant session today with Mark and Tony from BSI. Anything that talks about resilience in supply chains is good by me, and proactive risk management sounds even better. So, Amelia, if we could go on to the slides, please. Lovely. I'm the incoming Director of Technology Transformation at De Montfort University. Cybersecurity is a very old interest of mine, and it's never something that gets stale. And I'm sure a lot of you feel the same. Next slide, please. The reason that SASIG is able to offer so many amazing events and webinars is the supply network that we have. These guys hopefully won't be getting in your face, but they are incredibly important to us and we're very appreciative. Next slide. We, as always, have got a good collection of webinars coming up. So some particularly interesting ones highlighted there, including naturally cyber women groups. That sounds absolutely great. And we'd also like to highlight, next slide. The escape room challenge at the National Museum of Computing. I went last year and it was absolutely fabulous. So if there are places left, I strongly recommend it. Next slide. This is an in-person only event on the 30th of April. In-person events, if you haven't had a chance to go, are also thoroughly recommended. And there's lots that's relevant there for any CISO or cybersecurity professional, bearing in mind what a headache insurance is at the moment. So again, thoroughly recommended. Next slide, please. Big SASID, 23rd of April. They've got an amazing set of suppliers and also conference speakers and other events. If you haven't signed up, very well worthwhile seeing if you can get it into your schedule. Next slide. And if you're inspired by what SASIG does, they're looking for an additional events coordinator because they're actually expanding their activities, which is brilliant news. And next slide. Social media, usual places. And next slide. And this is the one that I summarize as, we can't control you, obviously, but please do respect Chatham House rules and fundamentally behave, please. If you've got questions, feel free to put them in the Q&A section, and also feel free to use chat. So that's it. Shall we go on to the main event?
Thank you, Sharon, and just bear with me whilst I share screen and start a sort of introduction. So thank you everyone for joining. Many of you will know me from previous webinars and time throughout the industry. But for those who don't, my name is Mark Brown. I'm the Global Managing Director for Digital Trust Consulting at BSI, and together with my colleague Tony, and he will introduce himself in a minute, we're here today to really talk about the work we do around supply chain security, not just in the UK, but globally. Indeed, Tony is dialing in from Phoenix, Arizona today to demonstrate the sort of global capabilities. And really we'll spend the next sort of 45 minutes looking at the work we do at BSI to look at data-driven defense and enabling our clients to undertake proactive risk management for the resilience of their supply chains. But before we dive into that, Tony, a brief opportunity for you to introduce yourself.
Sure. Thank you, Mark. And thank you, everybody, for joining, and SASIG for giving us the opportunity to present. My name is Tony Pelly. I'm Practice Director for Security and Resilience. So as Mark mentioned, based in the United States and helping our clients around the world with their supply chain risk management challenges, including both cyber and physical security issues.
Thanks, Tony. So as mentioned, BSI, we look at a number of different areas, and since 1996, cybersecurity, or information security as it was with the advent of BS 7799, has been at the core of much of the work we do. We've evolved a lot of that work into tackling the world's most difficult challenges. And I think all of us would agree that supply chain is really something that is a challenge that never seems to become any easier. But what we see is that it is changing all the time. Supply chain disruption never stands still, and there are a number of different reasons that we see for this. As Tony mentioned, we have a number of supply chain risk management services, including a product that looks at supply chain risk mapping. If anyone wants to find out more about that, they can reach out to us afterwards. But what we're going to brief today is some of the findings of our annual report that we take from the client work we do, but also the risk intelligence that we gather through data to look at what's happening in the world of supply chain. And our 2024 supply chain report, which we will make available for any attendees today, has found 4 key areas of changing nature of supply chain disruption. There is cause for optimism in addressing supply chain risk challenges. But the 4 areas that we see everyone is circling around are geopolitical tensions, the continuing economic uncertainty, the extreme climate events and the impact on sustainability. And it goes without saying that the supply chain is no longer just a physical environment, it is very physical and digital. And therefore, the technology transformation, the digital disruption that's taking place is significantly disrupting in places supply chains. And the 6 key insights that we've seen from the work that we do amongst our clients and the disparate parts of BSI is there are 6 key focus areas that the supply chain profession, both internally to BSI and globally within our clients, are recognizing. The first one is the move towards utilitarianism and the willingness to collaborate. A cottage industry has arisen around all things in supply chain. And I think many of us would recognize that there is a desire to shift away from that point in time questionnaire response, one client to one company. But in doing so, we have to recognize the risk doesn't stand still. It's a very, significant change of the nature of risk. And it's no longer a risk that can be dealt with reactively. It has to be dealt with proactively. We're seeing regulators, we're seeing audit and risk committees, we're seeing boards, we're seeing executive management teams within our clients really look to shift to a much more proactive risk-based approach and looking to understand the data that enables them to have those insights. And this has to be agile because much as the supply chain doesn't stand still, the world doesn't stand still. And that ever-changing global landscape has become a very agile environment in which to operate. And that requires organizations to really take a 360-degree perspective, not just on the supply chain, but everything that's impacting the supply chain, such as climate-related events. And all of this, we see, internationally, a significant drive towards greater levels of legislation. I think it's one of the things that certainly I've seen over my sort of 30 plus years in cybersecurity, that we have evolved from being very much a risk-based environment to an arena in which governments and regulators are saying that more and more we haven't been doing enough as an industry. And where we haven't been doing enough, legislation is now being put in place to force organizations to move forward. But enough about the overall highlights. Tony, I'll hand over to you to really talk through the first of the issues, which is around sort of the geopolitical tensions. And if you can just cue it up, and I'll move to the next slide as required.
Great. Yeah, thank you, Mark. So one of the issues that we're seeing impact supply chains more than ever before are geopolitical tensions. So there's some of maybe the more obvious ones, like the war in Ukraine or disruptions in the Red Sea. But we're also seeing a number of other issues impact supply chains as well. Companies are seeing supply chains or countries are seeing supply chains as more and more of a national asset, especially in areas like semiconductor or medicine and pharmaceuticals, biotechnology. And I assume that's something we'll see with the development of AI technology as well, again, closely related to the semiconductor industry. And they're seeing them more and more as sort of national assets. And so you're seeing a lot more nearshoring to friendly countries or allied countries than you would have seen in the past. And just to kind of put the overall frame on this, since, what I call kind of the big bang of supply chain, which is China's accession to the WTO in 2002, for about 20 years, you saw a kind of really flexible global supply chain where, labor was relatively cheap, companies were expanding in China, transportation was very cheap, and essentially the COVID pandemic ended a lot of that. You see an increase in geopolitical tensions, you see an increase or more volatility in the cost of transportation and supply chain. And costs are rising in countries that used to be lower cost, like China, and you're seeing the emergence of other places in global supply chains like India, Vietnam, Mexico, or Eastern Europe, depending on where you may be based. But those all have their own sort of risks as well, right? And so we'll talk a little bit about how kind of the current issues are impacting supply chains, but just keep in mind that sort of this type of kind of geopolitical or global political uncertainty is having a greater impact on supply chains than it has really at any time in the past 20 years. So if we go to the next slide and talk specifically about Red Sea disruptions. So one of the things that we're seeing is disruptions in the Red Sea due to Houthi attacks on shipping through the Gulf of Aden and in the Red Sea. So what's happening is a lot of companies are rerouting around sort of the Horn of Africa. That's having an impact on ports in East Africa, so you're in South Africa. So you're seeing primarily South African ports, but people are looking now at using ports in Madagascar or Mauritius or other places in Africa. The issue that they're seeing there is that there's not a whole lot of capacity for the types of large container ships that typically go through the Suez Canal. As a result, people are looking at overland alternatives. So sort of like what you sometimes see in Central and South America, where you'll have people go across Mexico, or you'll have people go across Colombia, for example. They're now looking at those types of alternatives for the Middle East as well. So potentially landing in Dubai or landing in the UAE. And then shipping through, kind of through the Middle East or through, up through the area around the Suez Canal, because of these persistent attacks and sort of the way that they're kind of continuing to be an issue for cargo shipping. But what we would advise here is that a lot of the areas where you would be shipping through the Middle East are kind of a somewhat higher risk for cargo theft. You can see there around the Cairo area, certainly a greater risk of cargo disruption and cargo theft for those areas as well. We've also seen some smuggling through Saudi Arabia and other places. So again, impacting the kind of impacting the freight that's going through there. And also risks in some of the other major urban areas that you see in the Middle East, such as Dubai, as I mentioned already, and parts of Saudi Arabia as well. So whenever this happens, we see disruption with a major port or major choke point like the Suez Canal. People try to get very clever and ship to places where they normally wouldn't ship to. But what we're seeing is that comes with its own risks as well, which gets back to Mark's point about how we just need to be sort of more agile and adaptable as we're developing these new routes or looking at alternatives. We also need to be thinking about the new risks that go along with those new alternatives as well. One other kind of interesting supply chain issue that we're seeing, Mark, if you go to the next slide, is diversion around Russia. So obviously, since Russia's invasion of Ukraine, there's been very heavy sanctions placed on Russia and exports to Russian customers. So what we're seeing is increasingly sophisticated diversion, sometimes involving third countries in the Middle East in some cases, sometimes in other countries as well. So this places the onus on companies to not just understand their supply chains, so who's supplying them their raw materials or products, but also their distributors and customers in some cases as well. So there's a number of different indicators that you can look at for, is your customer trying to procure for a third party, in terms of the types of payment terms that they'll have, in terms of the if they're a newly established company, if they don't appear to have sort of actual physical presence or locations. But we encourage people to not just look at sort of the due diligence for their suppliers, but also do due diligence for their customers as well, for issues such as this. And so I'll hand it back to Mark to talk about sort of the larger macroeconomic environment that we see. So there's sort of the geopolitical and global, international environment that's shaping supply chains, but there's also economic factors that are shaping supply chains as well, which Mark will cover here.
So it goes without saying that the past few years have seen economic turbulence, much to a level that hasn't been seen for decades. It hasn't been restricted to individual countries. It has been a global economic crisis. And if we look at the Organization for Economic Cooperation and Development forecasts, we've all seen that inflation has been on a bumpy ride for a number of years. During the 2010s, it stood quite still, around between 2 and 3%. Most of the G7 and G20 countries were quite happy to maintain the levels that they were seeing. When COVID hit, governments, by necessity in many cases, to protect their economies, invested significantly in the protection of society through furlough schemes, through guaranteed wages, and upholding businesses. But a further shock to the global economic stability arose with the Russian invasion of Ukraine. And between late February 2021 and the height of the inflationary crisis in July 2022, we saw many of the top countries in the Western society with inflation rates in double figures. The cost of living in many cases was out of control. And this created pressures in many areas of the global supply chain market. Now, we are starting to see these economic inflationary factors reducing. And indeed, only last week, the UK saw inflation drop to a relatively sort of decade low of 3.4%, and a further drop expected and forecast by the Bank of England in April as the oil price figures continue to drop back towards its economic target of 2%. But handing back to Tony, one of the things that we have seen, and the data gives us lots of insights into, is the impact and the impact that we see in criminality of these economic factors. And one of the core areas we'll look at is cargo theft.
Thanks, Mark. So some of the impact that inflation has had on cargo theft is that we do see more targeting of more basic kind of staple products. So in times where there's lower inflation, what we typically see is more targeting of things like electronics or pharmaceutical products, which may be higher value. What we see when in more inflationary periods is targeting of more of those kind of basic materials. So things like fuel, food, and that other category is also kind of other staples like clothing, apparel, those kinds of things. So you see in times of inflation that those are targeted a bit more than they typically would be. And you can see some of the increases here for some of those. But we expect that as inflation begins to cool, you may see less targeting of some of those products. And more targeting of kind of our traditional kind of higher value products, things like automotive parts, things like electronics, think, TVs, consumer electronics, those sorts of things. We may see more targeting of those as inflation begins to cool. So again, this just gets to the dynamic sort of the dynamic nature of supply chain risk and how it constantly changes based on sort of, economic factors and broader geopolitical factors as well. One other thing we're seeing as well, Mark, if you could go to the next slide, is what's called shrinkflation, and this is something that may kind of persist even though inflation in the economy has tamped down a bit. Is that the products are reformulated with cheaper ingredients, the price stays the same or increases, so the quality is a bit lower, and that's having an impact on suppliers as well. So suppliers are being asked to sort of reformulate their products, change them in different ways, maybe use different inputs in order to keep that overall price level about the same, or allow companies to charge more for it. So it's companies are sort of reshaping their supply chains, in some cases in response to inflation. And in other cases, we're seeing governments take action on that, related to price gouging or potential decreases in quality. So again, something to be aware of kind of as supply chains reshape kind of in response to global economic and in some cases local or regional economic conditions again. So we encourage people to take a broader look at their supply chains, really kind of understand the impact that these kind of economic factors are having on their supply chain, targeting of their supply chain, and even the makeup of their supply chains as well, may have to change. Another kind of big factor, in addition to global economics and the geopolitical issues that we're seeing that's shaping global supply chains, are extreme climate events. This is something that we've seen increase over the past few years. And I think too, it's a bit different than what we've seen in the past. I remember 10 years ago, you'd have to worry about maybe a single hurricane during hurricane season or typhoons and earthquakes in the Pacific Rim, potentially impacting the supply chain. Now what we're seeing is more of a kind of overlapping kind of ecological or environmental crises or issues impacting the supply chain. So if you look at some of the issues that we've seen just in 2023, you may have issues with extreme temperatures in China leading to droughts, which again can have an impact on the supply chain because very water-intensive manufacturing processes may not be able to go forward. So let's say, for example, you're manufacturing a product like baby formula, which may be manufactured in Europe, but China is a major market for baby formula. So you have record temperature in Europe over the summer of 2023. That means that it's much more difficult to ship that baby formula. You can't ship it the same way in sort of temperature stable conditions that you'd be able to previously. And also in China, you may have those same kind of issues. So we're seeing an impact on both sides of the supply chain, in a way that may not be the case before. So that can be a major factor in business decision making. And as we're seeing these separate events in different parts of the world are having an impact on supply chains. The most common type of weather event, as you may have guessed, that we're seeing is sort of torrential rains, extreme heat, and more intense storms. So Mark, if you go to the next slide, we have some of the data to kind of back this up. A lot of the most severe weather events that we see are flooding and severe storms. So just flooding accounted for 42% of recorded natural disaster incidents. One thing that we're seeing our clients do a bit more of is really map out their supply chains, understand where their suppliers are located, not just the flood risk now, but the flood risk 10, 15, 20, 30 years from now, especially if they're looking at potentially expensive capital investments in some of those places or building out new supply chains. They want to understand what the risk is going to be, not just now, but in 20 years, working with their insurers on those kinds of issues as well. It really is kind of shocking, sort of the things that we're seeing, the type of 100-year storms or flooding that you'd expect to see, once a century, we're seeing once every 20, 30, 50 years. And same for more extreme storms as well. So again, thinking about the impact that has on supply chains more broadly. So I'll hand it back to Mark to talk about one of the other big issues that we're seeing, which is technology-powered kind of disruption of the supply chain.
Yeah, maybe just before moving on to technology-powered disruption, one of the areas that certainly I'm seeing a lot of clients really focus on at the moment is the diversification of aspects of the supply chain because of natural disasters and weather climate events. I go back to about 10 years, and it was well reported at the time where there was a shortage in global hard drives for laptops and desktop computers because of extreme weather events in Thailand and Malaysia that disrupted the manufacturing perspective. And as Tony said, these events are becoming more and more regular now, and clients are therefore looking to see how they can build that resilience. How do they diversify their supply chain so they don't have that single point of failure, that single point of disruption existing? And that's certainly a key trend, Tony, that I'm seeing with my clients, and I guess that you're seeing as well, is that diversification because of the weather impacts globally that are taking place.
Absolutely. Yeah, a number of factors are pushing them towards looking at multiple sources of supply or alternate sources of supply, including weather.
Yeah. So moving forward, I think one thing that everyone can see is that the physical supply chain is no longer solely the manner in which businesses are operating, and that the digital supply chain or the technology-powered supply chain is really continuing to evolve. Be it upstream, be it downstream, be it midstream, the walls of Jericho have firmly been torn down in terms of the perimeter of an organization. Deperimeterization has truly happened. But not just that, organizations are recognizing that if they don't digitally transform, they face the quandary of will they continue to exist in a few years' time. So as organizations themselves are changing, their supply chains are changing. And certainly we're seeing the phrase the metaphysical supply chain really become a common term in all areas. But as we touched on earlier, and we'll come back to further down the presentation, what we're also seeing is that legislation is impacting this. We're seeing cybersecurity, we're seeing business continuity, IT disaster recovery, privacy, all become key components. And when we look at many aspects of the supply chain, and maybe just focusing for a minute on areas such as outsourced manufacturing, what we're seeing is that the organized cyber criminals are really becoming very clever in the way they approach this. They are organized crime, and they are very organized in the way they attack, they're looking at this. And if we look not just at the daily news, and it is almost daily news, but also some of the more sensitive reporting aspects that we're able to tap into, we see that the organized cyber criminal is moving into deliberately seeking to disrupt the supply chain. The attacks are targeted not necessarily at the end target, but at the supply chain, which is often seen as a soft underbelly to expose multiple targets. So the manner in which an attack is taking place is deliberately seeking to exploit maybe the second, third, or even fourth or fifth parties in a supply and value chain, knowing that it's a much easier route into a harder target. Now, these risks are not specific to individual sectors, and indeed what we're seeing is many of the attacks are going after the hyperscalers in terms of the number of clients that they provide services to. And what we're seeing globally is that across the G7 and the G20, those governments are really starting to recognize the importance of that managed supply chain, that digital supply chain risk. They haven't gone fully to regulatory compliance yet. But certainly what we've seen in the UK is guidance towards supply chain. We've seen executive orders towards supply chain within the US. And it's likely that as more and more countries see this, not just as an economic risk, but in many cases as a critical national infrastructure risk, that regulatory compliance will become a method by which it's a license to operate, to demonstrate that security of trust. One of the key areas is that the logistics environment to the supply chain is historically one that is not that advanced from a digital and cybersecurity protection. Yet, if we look at the aggregation of data that a logistician or the logistics distribution companies have within their power, then it actually creates that aggregation level risk to many other aspects of business. So moving on from looking at the digital disruption that's taking place, what we see is a natural segue towards the regulatory effect. And Tony and I have touched on, throughout this presentation, a number of occasions where we're seeing increased levels of regulation being imposed into the supply chain and to organizations as they look across their supply relationships with other organizations. And what we see is that these are stepping up all the time. There's no let up in the advancement of the numbers of regulation. And what we're seeing is that organizations are not only responding to those regulations. There's not only the continuing cottage industry of questionnaires and right to audits and supply chain, queries that are arising, but our data and our insight shows us that they're trying to get ahead of it by demonstrating that they are recognizing the need for proactive risk management. They're actually hoping to stop governments focusing entirely on regulation. Because what's been evident over a number of years is the more you regulate an industry, the more you regulate a process, that in many cases from a cybersecurity or a data privacy perspective, or indeed a wider digital risk, the more regulated it is, the more brittle it is. The more brittle it is, the more easier it is for the cyber criminal to go after, because they know the prescriptive steps that organizations are having to fulfill. So organizations are trying to get ahead of this. They're trying to say, don't regulate us. We recognize the need to protect ourselves here. We recognize the need to actually put in place better protections than we have been putting in. But the past year alone has seen a number of different perspectives. In 2023, we saw the SEC pass both rulings on cybersecurity and sustainability across Europe and in the US, and indeed across Asia Pac. Certainly in Japan, we're seeing formal reporting regulations being put in place on sustainability as it impacts the supply chain. And certainly over in North America, Tony, and you can maybe add some flavor to this, the due diligence obligations both across Canada, the whole of the US and California are certainly stepping up.
Yes, absolutely. We're seeing quite a bit of change there and kind of rapid progress in regulating supply chains from that area in terms of social and ethical kind of considerations and obligations on supply chains. The other thing that's especially interesting is that even though it may just be California or Canada that are putting these regulations into effect, obviously California is the largest state in the United States and also the largest economy by state in the United States. So almost every major company, regardless of whether they're headquartered in California or not, will likely have to deal with those types of regulations. Same with Canada as well, because you have a somewhat integrated market in North America with the USMCA. So even companies that are not based in Canada will likely have to comply with some of the Canadian regulations. We're also seeing pressure as well from US Customs and Customs and Border Protection to keep a closer eye on forced labor, especially in countries like China and other countries in Asia as well. We're seeing quite a few kind of seizures of products coming into the United States on suspicion that they may have been manufactured with forced labor. So again, just sort of a tightening of regulation around the supply chain. And also, as we've talked about a couple times, just sort of the linking of supply chains with national interest and with broader geopolitical concerns. And one way that's kind of manifested itself is with sort of China's reaction to some of the regulations that we're seeing. So Mark, if you go to the next slide, we'll talk a little bit about that. One of the key things that companies have been doing in order to kind of gain better visibility into their supply chains, especially in China, is to do audits and assessments of their suppliers from a social point of view. So looking at things like forced labor, working hours, pay, those kinds of things, and doing really in-depth audits and assessments of their suppliers in China, mapping out that supply chain to give them that greater visibility into where the raw material is coming from, how the workers are being treated, And so in response to some of the actions that countries in North America are taking, or the United States specifically are taking with regards to forced labor, we're seeing China really kind of tighten the ability to do those kinds of social audits, or do that any type of auditing in China. So we've seen in some cases raids of companies that do this type of social auditing or due diligence inspections and assessments. And that's making it more difficult to understand what's actually happening in the supply chain, and more difficult to stop bad practices in the supply chain as well. It's also a powerful motivator for companies that may have previously been just based in China, or all their suppliers were located in China, to have what's called a China plus one strategy. So looking at, continuing to produce in China, but also, maybe diversify their supply chains a bit. As we've mentioned before, there's a number of different things that are pushing companies to diversify their supply chains. And this is just one more thing that's sort of adding to that. Right here on the right, you can see the statistics of shipments that are coming into the United States that have been stopped on suspicion of being manufactured with forced labor. So you can see in total, it's about 7,000 shipments that have been stopped, which is actually quite a few. About 3,000 of those have been detained. About 3,000 of those have been released. And what we're seeing is that companies are being asked to produce really detailed information about the provenance of those products, and going deeper and deeper into the supply chain in order to understand sort of where those products are coming from, how they're being manufactured. At the same time, it's becoming more difficult to understand that, especially in China. You can see some of the distribution of industries that we're seeing here. It does see that seem like they're almost going kind of a cyclical, right? Like they find more information about the automotive industry, for example, so they'll stop more automotive shipments. They find more information about the electronics industry, so they'll stop more electronics shipments. So again, just another thing, if you're importing into the United States or into North America at all, to kind of keep an eye on, and to evaluate for supply chains. So I'll hand it back to Mark now to kind of wrap us up a bit, and we can start handling some of the questions as well.
So appreciating for everyone that's a very rapid run through of a year's worth of study of data within BSI. I think it's safe to say that in conclusion, we are dealing with a risk that is changing very fast by its nature. A lot of people have thought, when we're looking at supply chain risk, what are the different factors? And people often disassociate security and sustainability. At BSI, we actually look at it very differently. We look at supply chain risk being the cornerstone, and that security and sustainability are just two sides of the same coin. You can't address them in isolation. They do feed off each other. But if organizations are really seeking to put in a proactive response, business continuity, and resilience plan to their supply chain, then doing it just simply by third-party due diligence questionnaires doesn't work. There needs to be a risk intelligence paradigm brought to this. The data is central. The data being analyzed and researched over multiple months, years, across different sectors is really what allows us to work with our clients to help them shape their proactive responses. So Sharon, I'll stop sharing there and hand it back to yourself to lead on the Q&A.
There we go. Lovely. Thank you very much indeed. That was really interesting. We have got two cracking questions already. So my particular interest is the first one. I don't know if you can see it, Mark,
Yep.
and Tony. So I'll just read it out. Quite a bit of work is being done in New Zealand and Australia and Ukraine on verification of suppliers that connect to specific supply chains using digital ID wallets. Is that something you see expanding?
Tony, do you want to start on this, and then I can follow up?
Yeah, absolutely. So this is actually something that we have helped our clients with, and our customers with, is sort of how do they better verify, which suppliers are doing what and where. And so some of the work that we've done is basically, especially in pharmaceutical supply chains, is kind of mapped suppliers and mapped the distribution chain to what we call decentralized knowledge graphs. So it'll take individual data points from different systems, from different pieces of information, could be related to the GPS tracking on the actual containers themselves, could be related to manifest data or other information, and linking those all together so we can get a good picture and full traceability through the supply chain. So we've done quite a bit of that in the pharmaceutical sector, where there was concern about diversion of donated products in India to countries like Pakistan, Sri Lanka, Nepal. But we're looking at applications in other areas as well. So that's certainly an area where we're helping our clients. And we do see that as a solution to these types of diversion risks, whether it's Russia related or other types of organized crime and diversion. So definitely an area that we're looking at.
Yeah, just following up on Tony's perspective, I'm probably well publicized as a skeptic of aspects of decentralized ledgers. But I do think that there is something in blockchain as we look at supply chain. There has to be a specific use case, and the more digital the understanding of the supply chain and the value chain, then the more pertinent the use of blockchain is. It's certainly something that our clients are asking us about. It's something that, as Tony articulated, and actually we presented at a SASIG supply chain in-person event last year, is the work that we do in the pharmaceutical industry to provide traceability of the use of donated drugs into India. So certainly if it's something that people are more interested in, then by all means using the opt-in session aspects at the end of the session, then please do feel free to reach out to myself and Tony, and we can provide more information on how we help organizations with that.
Sorry. Mark, to your point, I think there is quite a bit of legwork that goes in on the front end to kind of understand those data sources. What type of information do we need? It's not magic, right? Like there's a lot of kind of on the ground work with suppliers that goes into that as well.
Brilliant, thank you. Shona, that was a great question. Thank you. If you've got any follow-ups, please feel free to drop them into the Q&A. And we have Andy Britton. Events like natural disasters, while individually unpredictable, can be forecast using historic data. Geopolitical events seem inherently more unpredictable. And given how difficult it can be to predict future disruptive geopolitical events, can you advise what typical data items you'd use to help forecast future supply chain risks? That's a cracking question.
Tony, do you want to talk about our screen offering here? Because it's probably the answer to the question.
Yeah, absolutely. Yeah. So we have a tool called Screen that looks at these types of risks and sort of the frequency, likelihood, and impact of those events. So we have a team of analysts who are working by region, looking at local, kind of closed and open source information that we have access to kind of forecast out the likelihood and the potential supply chain impact of those events. So we think it's important, and our Screen tool helps companies do this, sort of marry up that risk-related information to your own supply chain. So there's two halves of it. One is understanding sort of the likelihood and potential impact of global geopolitical events, which our Screen tool definitely helps with. The other is sort of mapping out and understanding your own supply chain and building out flexibility in that supply chain and being more agile with the supply chain as well. So that could mean redundant suppliers in some cases, redundant days or weeks or months of supply in some cases. And our Screen tool can help with that as well. So mapping your supply chain against those geopolitical risks that we're looking at, but certainly an issue that a lot more clients have asked us about, especially since the invasion of Ukraine. So.
Okay, that's great. And Shona, you've got Mark and Tony. If you're at Big SASIG, I'm assuming that at least Mark will be, and hopefully Tony as well.
Unfortunately, I won't be there, but there will be people from the team there that week that will be able to assist.
But I'll leave that one with you, that note from Shona. So we also have Paul Mayo around. Okay, this is my ignorance. What is TAPA?
Yeah, I can speak to that.
Okay, lovely. Thank you.
Hey, Paul, nice to see you. TAPA is the Transported Asset Protection Association. So it's a group of, pharmaceutical, electronics, other typically high value, but a lot of other companies as well who work on basically in transit protection of cargo, more or less. So they have standards for physical security standards for warehouses, physical security standards for in-transit transportation. And they're looking now at developing a cyber security standard as well. And they have actually rolled it out in the United States. It's a fairly basic standard, I would say, but as Mark mentioned earlier, in the logistics and transportation space, there's generally a very low level of maturity and understanding around cybersecurity risk, and just less of an ability to deal with those types of risks. So really any type of standard that can help give those companies a bit of a leg up. I mean, we're talking about potentially trucking companies that have 3, 4, 5 trucks, right? Like very small companies. But there is a risk of, related to cybersecurity, even for those small companies that can have a major impact on larger supply chains. So in my opinion, anything that can be done to sort of increase the level of awareness, understanding, and kind of, more proactive preparedness for those types of companies, I think is good. And I think it's something that, if you are working with logistics and transportation companies, it would be good to sort of socialize with them as well. Or, Paul works in insurance, or with your insurer as well, just kind of advertise as, hey, there is a standard out there specifically geared towards logistics and transportation companies, and cybersecurity. I don't know, Mark, if you have any additional
Yeah, no,
thoughts.
a point I was going to make there, and it's a comment from Andy Britton in the chat, is that one of the key challenges with moving to proactive risk management is the difficulty in obtaining accurate and useful data. And for me, this is the other benefit, Tony. Not just do we have the screen capabilities, not just do we have your team, my team, sort of looking at and working with clients, but we also partner with with insurance companies, the likes of NMU, the likes of Munich Re, and we approach a lot of the risk management in supply chain from an actuarial perspective. And an understanding of how risk insurance works is actually very key in our findings to how to really move to that proactive perspective. The reason for that is we've seen a massive change in the insurance industry, certainly over the past 12 to 18 months, specifically with regards to cyber risk insurance. We've all seen that premiums have, certainly in North America, but also in the UK and Europe, premiums have increased. Indeed, getting or being able to access cyber risk insurance across your entire business operations has become more difficult, unless you can prove that you're taking a proactive approach, unless you can prove that you're actually putting in place mitigating procedures. Because what the insurance industry was seeing, that people were simply not even trying to treat the risk, they were just transferring it to insurance-based payout. And those insurance-based payouts haven't been happening because organizations were effectively unable to demonstrate in a number of cases that they had actually made any effort to undertake their obligations within the insurance contracts. So that partnership of bringing together that risk intelligence, that insurance, that actuarial studies is actually central to how we approach supply chain risk and resilience within BSI. That there's no one cog in the wheel is the answer to everything. It has to be that amalgamated approach that really takes a step back, looks at the entire ecosystem, and then by blending all of the different responses through risk intelligence, through insurance, working on proactive data analysis, that really we can help organizations move forward and move from a very reactive posture to it takes time, but moving towards that proactive positioning as they seek to address their supply chain risk.
And if they need a reminder of that supply chain risk, Steve Jones posted a really interesting link to an article about the KNP logistics group, which went into administration not that long ago due to a successful ransomware attack. So we don't have any more comments or questions. If I can perhaps just ask Mark and Tony, have you got any last thoughts for us?
I'll start off maybe by just saying, as mentioned at the outset, we do produce an annual report. It was published sort of late January, early February, and we will follow up with everyone attending to provide a view to be able to download that report. And if there's any further questions thereafter, then please do reach out to myself or Tony.
Tony?
No, I think Mark summed it up well. And, I
Brilliant.
think, yeah, thank you.
That's lovely. Thank you. And Steve, if that was you posting a topic for another webinar, thank you very much. So yeah, modern software relies on free and open source software. So how's that different to the physical? That is a whole nother webinar, so please look out for it. And on that note, I will thank you all very much indeed for your time. Mark and Tony, thank you especially. That was really interesting and, as always, extremely valuable. So have a great rest of day and thank you.